Have you ever been totally stuck on a tough choice? I mean, really paralyzed? Whether you're running a business or just trying to figure out a big purchase, knowing what to focus on and, just as importantly, what to ignore is an absolute game changer. Today, we're going to dive into the world of tactical decision-making using a framework that, trust me, will help you make smarter choices in just about every part of your life.
So, to kick things off, let's put ourselves right in the middle of a super common but really tricky business problem.
Okay, picture this. You run a company called Pixel Puzzles. Business is pretty good, but you've got some extra capacity in your factory. It's just sitting idle. Then, out of the blue, a massive retailer calls. They want to place a huge one-time order. The catch, they want a steep discount, a price way lower than you normally charge. This could be a massive win, but you've got to be sure.
And this is the classic dilemma, right? On paper, the price they're offering might not even cover your average cost to make a single puzzle. So do you just say no to avoid losing money? Or is there something else going on here? This is one of those times where just going with your gut could be a huge mistake. What you really need is a system.
And lucky for us, there is one. The pros use a reliable, structured model to tackle exactly these kinds of short-term decisions. Think of it as a 6-step playbook that can turn a really confusing problem into a super clear choice.
And here it is. Step 1, you figure out what the actual problem is. Step 2, you identify your options. In our puzzle scenario, it's pretty simple. Accept the deal or reject it. Step 3, and this is the big one, this is where you separate what actually matters from what doesn't. After that, you crunch the numbers for the things that matter, you think about the non-financial stuff, and boom, step 6, you make the call. It's a clear path from total confusion to real clarity.
So let's zoom in on that critical third step, because honestly, this is where the magic happens. The key to making the right choice isn't just about having a ton of data. It's about having the right data. So what exactly makes a cost relevant? Well, it has to pass a super simple 2-part test. First, it has to be a future cost. We're not looking backward. What's done is done. And second, the cost has to be different depending on which path you take. You know, if a cost is going to be the same, whether you say yes or no to the deal, then it's totally irrelevant to your decision.
And that brings us to the villain of our story, the sunk cost. A sunk cost is just money you've already spent that you can never get back. Think about the rent on your factory for the year, or that expensive machine you bought last year. Since you can't change it, it has absolutely no business being part of a future decision. And this quote just hits the nail on the head, because the problem isn't the logic, it's our own brains. We are hardwired with this thing called loss aversion. We hate the feeling of losing something so much that we'll make an even worse decision just to avoid admitting it was a loss. It's the reason we've all sat through a terrible movie just because we bought the ticket. That ticket price, that's a sunk cost. The money is gone whether you stay or leave. The only relevant things are what happens in the future, your time and how much you enjoy it. This breaks it down perfectly. Think of it like this. Relevant costs are the signal, the clear information telling you which path to take. Sunk costs? That's just noise. It's distracting static that gets in the way of you seeing the real consequences of your choice. Your job is to learn how to tune out all that noise and listen for the signal. All right, so now that we have this secret key, separating the signal from the noise, let's use it to unlock a few classic business challenges. And this way of thinking is, it's incredibly versatile. It works for all sorts of decisions. For example, should you make a part for your product in-house or just buy it from a supplier? That's a classic make or buy decision. Our Pixel Puzzles problem? That's a special order situation. And then there's one of the toughest calls a manager can make, deciding when to pull the plug on a product that looks like it's failing, the keep or drop problem. Yeah, let's really dig into that last one because it's a perfect example of how sunk costs can be so misleading. So imagine a company with 3 product lines, and one of them on the income statement looks like it's losing money. The obvious move is to just get rid of it, right? Well, maybe not. Let's look at the numbers. Okay, take a look at this table. Your eyes probably shoot right to the bottom line for the Gamma product line. It shows a net loss of over 13 grand. Looks pretty bad. But wait. Look up a few lines to where it says allocated common cost. That's the noise. That's stuff like the company president's salary or the rent on the main office, costs that are just being spread around. Those costs aren't going anywhere if you drop Gamma. Now look at the real signal, the segment margin. It's a positive $12,000. That is the actual cash that Gamma is contributing to the company. So what happens if you drop it? Get this. your company's total profit actually goes down by $12,000. It's a classic trap. So those allocated costs, they're just financial noise. They're going to be there no matter what. By ignoring them and focusing only on the money you'd actually save and the sales you'd actually lose, you see the real picture. And that's how you make the right call.
Now, here is the absolute best part. This isn't just some boring accounting concept stuck in a textbook. It is a practical superpower that you can start using every single day.
Seriously? Thinking about going to college? The cost of your high school education is a sunk cost. The relevant factors are the future tuition versus your future potential earnings. Trying to decide whether to repair that old car again or just buy a new one? All the money you've already poured into repairs is sunk. It's noise. The real decision is about future repair costs versus future car payments.
At the end of the day, that's what this is all about. Becoming a great decision maker isn't about getting more and more data. It's about building the discipline to filter out all that irrelevant noise so you can see the real choices and the real consequences that are waiting for you down the road. So I'll leave you with a question to chew on. Whether it's a project you've already poured tons of time into, a non-refundable plane ticket for a trip you're not excited about, or maybe even a relationship that's run its course, what sunk cost are you letting cloud your judgment right now? Just being able to name it is the first step to making a much, much better choice.